This video is brought to you by Sight. Guys, I will never sell you anything. Please be aware of scams or YouTubers selling you courses or those promising hopes and dreams. Speaking of hopes and dreams, let's talk about Trump's trade deals. It all seems like fantasy at this point. I feel like Trump is selling us a timeshare in Narnia. And then we get this massive press conference at the White House with Mark Carney and no massive announcement. And apparently we're only going to get a massive announcement in a few days. So why is Carney in the White House? Is he just there for free coffee and a photo op on the dime of the taxpayers? And let's talk about Jerome. You're pretty much giving him the stage tomorrow, but you want to fire the guy. Jerome has virtually nothing to lose. A man with nothing to lose is dangerous. If someone could please explain Trump's strategy in the comments, that would be greatly appreciated. Also, AMD earnings were great. Let's roll the tape. Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks fell on Tuesday as the Federal Reserve kicked off its two-day policy meeting. Investors are watching closely to see how Trump's tariffs could influence the Fed's stance on interest rates and the broader economic outlook. The market didn't really like any of the news it got today. The price action was very dim. Again, coming off what has been, 14, 15, 16% rally off the lows. There was a little bit of green, but mostly in defensive sectors. You could see here utilities were pretty green along with comm services. This is a defensive sector, especially stuff like T-Mobile and AT&T. They tend to be a little bit defensive. We saw the defensive components of consumer durables, stuff like PG, Philip Morris, do okay, and then some of the consumer names as well as energy. They were in the green. And apart from Nvidia and Apple, which were kind of flat today, everything else was red. Tech was red, Amazon was red, Microsoft, Google was red, software as a whole, financials. It was actually a very, very ugly day, a very risk-off day in the market. And this exemplifies what I mean by that. Gold was up 2.82%. That's a safe haven asset. Utilities was the only sector that was up. That's a defensive sector. Every other sector was in the red. And leading the selling lower was some of these sensitive names. Look at discretionary industrials technology with the SPY down 0.83%. It's not a disaster day, but still, the underlying momentum in the market when you look at utilities and gold relative to some of the risk assets is telling you everything you need to know. You could see here that every single asset class, every single factor and size segment was red today, with large cap growth taking it on the chin down 1.76% today. And we saw some mild outperformance here in the value and core segments of the market. And despite Donald Trump meeting with Canada's Prime Minister Mark Carney, that wasn't enough to reinvigorate the market momentum, despite the fact that they probably are talking about trade deals behind closed doors. So even this couldn't help the market go higher. So right now, what the market is telling you is that it wants to see announcements. It wants to see the deals. It's essentially saying, show me the money when it comes to trade deals. We also did get some economic data that didn't really help today. We had a 140 billion trade deficit here in the US. And this can cause short-term stock volatility due to concerns of weaker exports and potential dollar depreciation. And again, this is probably what the market is trying to price in. Looking at some market movers, Tesla was down 2% today, and that's because we got some data out of Europe. Tesla registrations in the UK was down 62%. BYD registrations were up 600%. Now, the stock only being down 2% probably means that this figure is already priced in. That being said, the market definitely didn't like the news, and that's why Tesla was down greater than what the market was down today. There could be a couple of reasons for this. One of them could be a Model Y refresh, but there's also just a buyer's strike when it comes to Tesla. Arista Networks reported its earnings. It was down 2.53% here in the after hours. Guys, this company, I've been looking into it. It's something I've been looking to buy for a while. I haven't pulled the trigger just yet. It had its 17th quarter in a row of EPS beats. Now, it beat on the top line, beat on the bottom line, but guidance came roughly in line. And when you have a PE of 37, the market's going to say, hey, you know what, I may as well de-risk some here while I can. That being said, this stock told us that management from this report told us that the AI trade is alive and well. And it was the same news with Advanced Micro Devices, AMD, up 4% on the back of its earnings. It beat on the top line, beat on the bottom line. It actually raised guidance by about $200 million. They guided for $7.4 billion for the quarter. The market was expecting 7.2, and that is why we're seeing a little bit of upbeat momentum here. Again, AMD telling you the AI trade is not over. Celsius very interesting. Now, they reported very, very weak results. The stock was up 4% today. So this is probably means everything is priced in. I think part of these results is also the fact that the Aligning new acquisition is finally done. They did have some integration issues, but that's all behind it. And it looks like everything's already priced in, even at a 56 PE ratio. When you have these results, stock is up. That's probably a very good indication that the stock has bottomed. Ferrari also reported earnings up 1.65%. Business as usual for Ferrari, be it on the top line, be it on the bottom line. Volume growth increased 1%, pricing up 10%. Very, very solid results. I've been waiting for a pullback to get into Ferrari for what feels like almost a year now. It simply hasn't come. Stock just got away from me, but we'll see what the future holds. And then for everything we saw today, we had 2,500 advances, 3,800 decliners. We saw net inflows in the NASDAQ 100, outflows in the New York Stock Exchange. The S&P 500 down 0.77%, and market momentum continues to fade. We still have a 50% level in the 5-day and 20-day. However, some of these longer term and medium term moving averages weakening from the start of this week as well as last week. And then looking at the charts there, you could see a very, very red day, and that's obviously coming from this massive rally you've seen here in the last couple of weeks after that Liberation Day sell-off. Now, we did say to kick this week off, we said we were looking for a little bit of weakness simply because we weren't getting any more good news from the trade deals. And I think the market had priced in a lot. We were looking for digestion this week. This is exactly what we got. So we couldn't get above the 5,700 area, and now we're pulling back. And I wouldn't be surprised for us to actually go ahead and see the 5430 area until we actually get a very solid live trade deal. Scott Percent keeps saying a trade deal is 1 week away. It's been like that for 2 weeks now. We'll see if it goes for a third week. That being said, the market is telling you guys it wants to see the money. It wants to see the trade deal before making its next move higher. So until we actually get that, this is fair value for the S&P 500. Now, we're looking really shocking in the after hours, down about 0.2% on what was a red day. That probably has to do with some of the earnings and some of the announcements we got in the after hours. But looking at the day as a whole, we saw Europe sold off. China was actually pretty green. Volatility ticked up ever so slightly. Yields fell. The dollar fell as well. Bonds gained as a result. Bitcoin very resilient, kind of flat. Gold up 2.85%. Silver up 2.3%. WTI up 3%. A great day for commodities as a whole. But let's talk about the S&P 500. So we kind of already have, and you can see that, we've sort of found resistance at this 50% mark. If you measure peak to trough, right, this right here is about 50% retracement. So we're finding resistance, and I think we will continue to sell off, like I said, until we actually get a trade deal. Then we'll make the next move higher. Until then, the path of least resistance is lower, and you can target the lower end of the range here, 54.30. But if we get a massive, massive trade deal, a massive announcement, we could see a movement up to the 5,700 area. And if we break the 5,700 area, maybe even close above these highs, we will go higher, the S&P 500. Very similar situation for the NASDAQ 100, right? We want to break above these highs, but it's going to need to come with very good news from the Trump administration. We haven't got that just yet. So the path of least resistance right now into the end of the week is lower. It does look like everything is priced in. A lot of the big names and earnings is behind us. We get very, very weak data. We don't get very important data. We do get the FOMC tomorrow, but ultimately Jerome Powell's commentary is going to matter more as to when we get rate cuts than the actual decision itself. So tomorrow, that's what you want to pay attention to. That can move the market, but I think we already probably know everything that the market should when it comes to the Fed. I think Jerome Powell is going to state his same old points that they're in wait and see. They're going to be data dependent. They're going to hold the Fed funds. But we may see some upside surprise. Who knows? We don't want to predict what he's going to try to do. You want to react to the market as a whole. Now, looking at the RTY, down 1.42% at least on the futures, right? And we couldn't go ahead and break above this level right here. We've sort of found resistance at the 2,000 mark, very similar to the S&P 500 and the NASDAQ 100. As long as we hold, this level, it will signal a higher low, relatively speaking, but we can actually see some softer price momentum towards this 1862 area. And that's what I'm expecting this week. I'm expecting I'm just expecting us to drift lower unless we get a solid trade deal from Bessent, from Trump, from whoever. We may actually get one with Canada because Mark Carney is in the US with Donald Trump and they are meetings behind closed doors, but we'll see where that leads. Looking at gold, and you can see gold is telling you everything you need to know. Trade uncertainty is back after the tariffs on movies that Trump implemented. And that's essentially why we're seeing gold rally. So for those of you that actually bought here, congratulations. I'm still not a big fan of gold. I prefer Bitcoin. You guys know why. However, gold is telling you that the tariff uncertainty, that trade policy uncertainty is back at the front of mind in investors. And when that is the case, they're going to position themselves into gold, into, you could say treasuries, but mostly into gold. That seems to be the safety bet, as well as Bitcoin to a degree. So you guys know how we measure Bitcoin. This is the global M2 money supply lagged by 80 to 100 days. When you do this, it gives us the path of what Bitcoin might do over the next month or so. And you can see M2 money supply keeps rocketing higher to the upside. Bitcoin tends to follow. Now, if we actually just zoom in right here, you can see that M2 money supply was actually supposed to pull back, right? That's exactly what Bitcoin's doing. So this pullback we're seeing in Bitcoin, the slight lack of momentum we're seeing with Bitcoin, that we've also seen in some of our other risk assets like stocks, completely normal, right? And we should see Bitcoin continue to move higher over the next couple of days. And that can go for as long as probably late July. So we are in the midst of like a mini rally here in Bitcoin. Don't get shaken out of your positions. We are going to go ahead and retake all-time highs, and we're going to go give some that, but it's going to take time, and we'll take it day by day. So for those of you that are not long Bitcoin, you missed the rally, I think now is a great time to get in. Hold. This is a long duration trade. We're looking anything longer than a month, 6 weeks, and the higher M2 money supply goes, the more likely this rally continues. But we are looking for a top out of about 144,000 here for Bitcoin. Guys, if you want exposure to Bitcoin and you don't want to go on like an actual crypto exchange, you can just buy this ticker right here. I have no affiliation with this company, but I think they're the best trade because they have the most volume, very liquid, and you can also sell options. Great idea to sell puts at the $50 mark. If you want to get into Bitcoin, maybe sell them 2-3 weeks out. If you get a sign, you do know that we are going to go higher, at least according to our indicator. So yeah, I think you might be able to collect up to $1. A 50 cents put, that'll make your cost basis at about 49. Very, very solid trade. So you can sell some puts, or you can just get long here, and ultimately we are going to go significantly higher. You do know we are going to go ahead and retake these all-time highs at the $61 area and then some. Now guys, in terms of stocks, if you don't want to exposure to Bitcoin or gold, stocks that I think should do really, really well over the next couple of weeks. Novo Nordisk, they have their earnings tomorrow. If they report great earnings and you see a good market reaction, that's probably the signal to get long, because we probably are going to go see these highs sometime in 2025 or 2026. AMD just reported its earnings up 4%, and I think this is going to be very, very good for the quarter as a whole. I think you could probably go to the 116 area here for AMD, so this is probably a great trade. I think another great trade that you probably could do, sort of like a value play, is PayPal. I would probably sell the $60 puts, maybe the $62 puts. If you get a sign, I think we're going to go see the $92 area. I was reading the previous quarterly report, and I think from what I can hear, management were probably going to raise guidance, but they didn't because of tariff uncertainty. That means that guidance raise is going to come in the next quarter. If you can get in here at the low 60s, maybe sell some puts, that would be a great opportunity to get long. So those are three trade ideas that I'm looking at right now when it comes to earnings and when it comes to market momentum. AMD is exposed to tariffs. Novo Nordisk has a lot of manufacturing in the US, and PayPal isn't really exposed to tariffs in the way that AMD is. So these are sort of like trade policy safe plays, except for AMD. But AMD's earnings report just told us the AI trade is alive and well. And let's talk about sentiment. It finally happened. We hit the greed zone. What a rally it has been. 3 to 4 weeks ago, we were in deep pessimism here, in extreme fear. We had a single digit number on the graph. It was at 2. We are now in greed. What a rally it has been. I was advising everybody to buy the dip when we made those Liberation Day lows, and look at us now. And a big reason as to why we're rallying is that earnings is looking very, very good. This is the latest update as per LSEG. S&P 500 earnings is sitting at 13.6%. If you exclude the energy sector, we're looking at 15.7%. Guys, about 60 to 70% of S&P 500 companies have reported. About 90% of S&P 500 market cap has reported. And earnings is looking very, very good. Double-digit, low teens growth. We're looking at mid-single digit revenue growth. 74% of companies reporting above analyst expectations. We're looking at about 6% in revenue growth if you exclude the energy sector. Things looking very, very good. This is the type of stuff you want to see at bull market lows. And if we look at full year forward estimates or next 12 months estimates, possibly the biggest surprise from this earnings season is that forward EPS revisions have already begun stabilizing after falling since Q1. If only a growth scare, 2015 and 2022 analogs look like buying opportunities for investors seeking a discount. So pretty much what this is telling us right here is that Q1 earnings look very, very good. And the revisions we're looking for in terms of Q2, Q3, Q4 might not pan out in the way we think. The earnings might actually be more resilient than we think. And that is a positive. But where does this leave us with valuation in the S&P 500? And on a forward PE basis, we're sitting at about 20 times, well above the 30-year average. And by historical standards, the S&P 500 is still relatively expensive, but you do have to compare this with a whole range of other factors. But let's quickly dive into the macro. And when we look at survey results, one thing we've seen is that the survey data has actually been quite horrid. Now, this weakening business sentiment could suggest potential headwinds for economic growth, and that could lead to stock market volatility. But ultimately, what we want to see is the survey data or the soft data translate into the hard data. We haven't seen that just yet, but we may get the indication of that this week. The most important thing to pay attention to this week is tomorrow's Fed press conference, as well as the Fed interest rate decision. Now, I still think we're going to see a 4.5% Fed funds or 4.25 to 4.5. But the press conference, what Jerome is thinking, is going to tell us everything we need to know, and that's going to determine where markets go next. We're also going to be paying attention to initial jobless claims on Thursday. That's about it. In terms of data, in terms of earnings, this is really what's going to move the market tomorrow. Before the open, we get Uber, Disney, and Novo Nordisk. We also get Oscar, Fiverr, Unity, Vistra Energy, and Barrick Gold. A very, very big day here on Wednesday pre the open. And after the close, we get Arms, App, Oxy, Carvana, DoorDash, Fortinet, Axon, Bros, AMC, Honest Corporation, Paycom Software. Guys, a ton of companies reporting here on Thursday after what has been a pretty volatile week on Tuesday and Monday. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, leave a comment for the algorithm. Cheers.